Okay, everybody's been talking about it and we want to know the facts. What exactly is private lending? More specifically, private mortgage-backed lending. We're going to take a few slides here. We're just going to overview the facts and how it can benefit you and why you should know about private lending as an investment option, since most people are not even aware that this is an option for them to get high returns without the risks or any volatility. So, before we get started, let's think on this. How do banks make money? Well, number one, when you deposit your money in the bank, in your checking account, your GICs, you usually get between 1 to 3%. And do you think the banks just take the loss and leave the money there? No. What they do is they take the money and loan it to other people for superior rates of interest. And we're talking about 6 to 24%. Now, how do they do that? Well, mortgages, credit cards, loans, lines of credits, and these all have a different type of risk. But the most secure way that they lend money and the lowest rate that people can borrow money for is with mortgages, because it's secured by real estate. And banks make huge money doing that because they make the money on the spread. So, let's stop the banks from making the money. And why can't us become the bank? So, let's do a quick overview on how private lending works. Real estate investors buy houses at discounts through foreclosures, short sales, auctions, etc. And they're able to acquire properties at more or around 40% market value at today. So if a property is worth today $100,000, these investors are able to purchase properties for less than $60,000. But to be able to get access to deals like that, you need to be prepared, and closing with cash is king. And this is where private lenders come in, because with private money, investors can move fast. And as a private lender, people can be paid up to 12% on their money consistently. Let's go and see how this works. When you're a private lender, the number one thing that happens is you invest in the property, not the borrower, because the property is what has value. When a property is identified and presented to you, you can then decide if you want to lend against this property. A letter of intent is presented, which outline all the terms and the amount that is required to invest in this specific property. And this letter of intent you can reply to and give yourself a first heads up as to if you want to pursue with this investment. The language is simple, it doesn't cost anything, and there's no commitment. But it identifies that you want to take advantage of this opportunity that pays a certain amount of return for a certain type of property. Once this has been done, an official promissory note and a mortgage is prepared, and we're going to break this down in the next slides. And again, as the investor, there's no cost to us, okay? When the money is sent, it's not sent directly to the real estate investor. Attorneys open a trust account, and there's an account that is a third party, and it ensures the security of the process. You send your money to this trust account, and the funds are not released for anything until a mortgage is recorded, which protects your investment. You receive all the official paperwork, and the money is sent to the company to purchase the property only after the fact. So, how do you get paid? Well, you receive a regular payment through checks based on the agreement you've made. Some agreements are quarterly, some are yearly, some are monthly, and some are at disposition. And the property, once it's been renovated, it's either going to be sold or refinanced, and at that time you get paid all the principal and the interest, and then the mortgage is removed on the property, and we're going to break this down at the next slide. And more than likely, after you've went through this process and seen how lucrative it is and simple it is, you'll be invited to repeat the process. And once you have a steady flow of investors who are presenting you these private deals, you'll be wanting to repeat as much as possible so your money can work for you. But I know what your biggest concern is, and this is the beauty about private lending. How do you make sure to get your money back? The mortgage that's put against the property is for the amount that you've lent. Now, the most typical type of investments will never require more than 80% of the value of the property. What this means for you is if you're loaning against a property worth 100,000, you would not loan more than 80,000. The investor has his $20,000 profit budgeted within the borrowed amount, and if the investor doesn't pay you back exactly what was promised, you can take over the property and make that $20,000 profit. There's no other investment tool that can give you that kind of security behind it. So, let's see what exactly will secure your loan. I mentioned the promissory note, I mentioned the mortgage, but there's also insurance policies in place and title insurance against the property. And as I mentioned, you have no expense throughout the whole process. The promissory note is in place, and it's a contract between yourself and the lender which says exactly how much is borrowed, how much is going to be paid back, how it's going to be paid back, and when is it needed to the principal comes back. The mortgage is in public records, so you're holding the property by the neck on the title, and nothing can be done to that property until you're paid back every penny. The insurance policy is in place so that if there's any damage, let's say the property burns down, guess who gets the money from the claim? The lender does. And the title insurance is in place to make sure that nobody from the past comes up and says, well, I think I own this property. And if they would make a case and claim ownership to the property, guess who gets all the money from that transaction? You do. And it shows that the borrower owns the property. Let's make a few comparisons. Let's say you leave your money, your $100,000 in a GIC for 10 years. And usually if you lock it for 10 years, you might get a 3%. And I'm generous by saying 3% because most locked monthly GICs get you about 2.6%. Okay, and we are at the mid-winter months of 2012, and that should not be changing anytime soon. After 12 months, if you've left your GIC at 100,000, you got $3,000. If you're investing in a long-term private investment deal, which you can see yields up to 8%, you're going to make $8,000. We're talking about a $5,000 difference per year, and you did absolutely nothing except cut the initial check and cash the checks coming in. Now, if you decide to withdraw from the program early, there's not even a penalty. As opposed to a GIC, if you break out of a GIC, there's fees involved. But I can tell you right away, the fees to cut your GICs and to move into private lending will not even matter because you're going to be making a $5,000 a year difference because you've decided to go the private lending route. Let's look at the stock market and private lending. Well, a few things here. Number one, when you're on the stock market, you can get dividends, but the amount is decided by the company. You have no control over it. If you're in private lending, you get a fixed return that was decided by you. You decide how much you want to make when you lend money to an investor. Number two, the value of the investment or the stock is determined by the market. Does the stock market have a steady curve or is it volatile? It's crazy volatile today because there's so many computers out there that are doing micro trades. And if you look at private lending, the investment is determined by comparables, other properties of similar nature that have recently sold. And are prices in real estate low or high right now? In the US, real estate prices are at an all-time low. Do we see the market recovering or do we see prices drop more? Well, all the signs have been starting to look more positive, and if the prices are already low, it doesn't get much more low. And if the property values go up, the security in your investment becomes bigger and bigger, and that's great. Number three, if the company goes Enron, what happens to you? How many people got screwed with Enron? Well, in your case, if the investor decides to disappear, you now own a property that had a $20,000 profit into it. So you have a legal process that can allow you to own the property if you don't get paid exactly what was promised to you. And if you look at the stock market today, you have all these big companies and these investment firms which are shorting, doing derivatives. The computers are making micro trades, which basically takes everyone's little money that's invested, and every split seconds they make a penny on a million transactions. It's not even fair anymore. When you're looking at the private lending route, there's no other investors. Pooling funds is actually illegal. You're a single investor holding the mortgage against a property that's worth more than you invested. So here's what I tell you. Stop gambling with your money. Private lending is an amazing way to be able to get a consistent return on your money with proper mechanisms in place which secure your capital. So, if you want more information on these types of investments, this is really for these people who you don't want to deal with tenant turnovers, you don't want to deal with property repairs, you have capital either within an property equity or in cash, and you just want to make your money work for you. Private investing is one of the best ways to do it. A lot of people that are looking into US real estate find it as one of the better ways to invest their money because it's passive. You don't need to invest your time. So if you want more information, let us know. We can get you more details as to how this works, and you'll be out of your way of stop making GIC returns which don't even beat inflation. You'll be making at least your money work for you.